So here's why it's so difficult to make money in the stock market. It's all mind seeds, manipulations, head fakes, well, brainwash. I mean, if you look at August and the rally up, I mean, you would have to play the push strategy. And the 5-day moving average was the support. So every day the market is going up, essentially the Q. And when I say the market, I say the QQQ because none of the other indexes matter. I mean, let's just be honest. Nobody cares about the SPY, the DIA. Those are for small players. All the big players who wants the big money, they're playing the QQQs and the big stocks like Amazon, Apple, Tesla, the big caps or the big techs. So you can see the push strategy for August. And this is a strategy a lot of the newbies or a lot of the new day traders are doing because with guys like Warrior Trading, all they know are the push strategy, which is essentially break out and continue to push. Just continue to push, it goes up and up. Now, this push strategy I think is being taken advantage of as manipulation. And at some point, you got to say, well, it's going to have to recover. And I used Fibonacci. Fibonacci was the biggest indication. I thought it was so strong that I just believed Fibonacci would, because the 38.2 line up with the significant level, which is the high of the February, that Fibonacci had to be the reason why it would retract. Now, it turned out to be the reason, or close to being the reason, in hindsight. But at the time, I had invalidated Fibonacci right at this point. Okay, here's Fibonacci. I allowed one day to go up, and I said, okay, let's wait. And then this next day, I said, okay, Fibonacci is invalidated. I mean, I can't believe they invalidated Fibonacci, but they invalidated. But I also noticed the 1200, but they closed above the 1200. So essentially, by closing above the 1200, I mean, I guess that's a capitulation top. I wish there was a wick which shows a capitulation top. There wasn't a wick, so it closed at the high. But yeah, it's all brainwash manipulation. I mean, they don't make it easy, right? If they give you the wick, it would be so easy to say capitulation top. I mean, in hindsight, if you look at Tesla and you saw that wick on the pre-market all the way to 537, and the sold off in the pre-market right when it reached 537, that could have triggered it. But at this point, I mean, I'm pretty much invalidated Fibonacci. I didn't think there were gonna be a downturn. I mean, I pretty much gave up the premise that this was manipulation. And I just said, well, any downturn probably would be bought up. So look how they do this. I mean, the next day, it already gapped down. The next day is already gapped down big, all the way from closing at the top above 1200 to gapping down toward the low. Pretty much the pre-market. Essentially, if you put up the pre-market, they sold everything from this rally up. They gapped it down already, so you have no chance of even getting in to buy the puts or to short. I guess you can. I don't know what the pre-market look like, but it's gonna be difficult for most people who don't play the pre-market to short at this point because this is a low. They put it at a level already gapped down at the low. So how could you short at this level? How could you buy puts when all this mine seeds, all this gangs from and closing at the high? You just gotta wait it out. And they sold it off. Right then they sold it off. So boom, 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 sold it to the next level, all the way to the 20-day moving average. I mean, this sold off was so quick, so fast. I guess if you know the way it's played, and now that that they're gonna do from level to level, I guess you can get in at any point here and write it down. But it's difficult. I mean, in hindsight now it looks obvious. They go from all the way from this point above 1200, gap it down to the next level, sold it all the way to the 20-day moving average. So at this point, you don't know what to do. I mean, you think it could be a bounce or it could go down, but it's at the 20-day moving average. It's at a significant level. So the next day, uh, they sold it off even more so quickly. I mean, look how fast they sell it off. You don't even get a chance to get in with the puts because you already had this mindset. I mean, your bias is so positive at this point that you're caught in the headlights of trying to play opposite. Like I said, it's very hard for someone who plays the puts or the push. It's hard to play the push and being accustomed to all this pushing to switch 180-degree and play the flush. It's just so difficult unless you're part of the manipulation. And then they push it all the way down to the 50-day moving average, just like that. Went from level to the 20 to the 50 to the recovery. And at this point, it looks like it's going to be recovered because of this V shape. So then they gapped it down to the 50 again. I mean, gosh, they gapped it down to the 50. It's like it's so impossible to play. Um, After they gap it down to the 50, they did a recovery, head fake recovery. Um, and if you looked at Amazon, this recovery was a push recovery. If you look at the way they did Amazon, they push it, push it. So again, that's a potential. Everybody would. It's a trap. Everybody thinking it's gonna go back up. It's probably gonna hit the 20. Yep, it did hit the 5-day moving average. So there's that trap hitting the 5-day moving average, and then it sold off. This is an account blowing. I mean, all of this potential account blowing. If you, this is more of account blowing because it seeded your mind that they're gonna recover. Um, yeah, that's really a account blowing here, and I guess Friday expiration. I think this was Friday expiration. Yep. This also was a account blowing because this head fake pre-market strength. So these are all account blowing, and I'm telling you, next week it's gonna be an account blowing if days that gonna come as well. So now Friday option expiration, they moved it all the way back down to the 50-day moving average. I mean, it's just not easy to play because they put it at significant level at 20-day, at 50-day, back to 20-day, at 50. I mean, if you look at end of day, all the way from 1200 level, gap down, 20-day, 50-day, 20-day, 50 days. So how would you fully look at this? It can bounce or it can go down. I mean, that's just really how it is. So the scenario is on Monday, most likely they're going to test the 1100, and you're going to have a pretty big range, right, as they battle for the 1100. And I don't think it's going to crash on Monday, thinking about it now, because the 50-day moving average is so strong. They're going to have some fight on it. And I don't think the tail is going to be below this tail because they want to head fake you. So they're going to me, I think like they're going to head fake it high. Like it's going to look high. And the next candle may look something like a fight here. And I just feel like it's going to go down. And it's to me, it looks like it's going to go to this next level. This to me is the most likely scenario on what the Nasdaq is going to do, because they're gonna do level to level. Now, it is true that this 50-day moving average is pretty strong. This 50-day moving average is pretty strong and can form the basis for a new rally. However, it just, to me, whoever did this run up, it's just too soon to do another run up. Like this run up is just so powerful that in what is it, a week and a half pretty much, that they're gonna attempt another run up. Why to a better scenario to me and a more logical scenario is the move down to this next level, which would meet up with 1050. This 100-day moving average going up to, so you'll see, yep, yeah, this guy right here will go up and hit 1050. So that to me is the next level. So from this level to 20 to 50, back to 20 to 50, maybe a little fast rally, and then to 100. And that makes the most sense because if you look at the big picture of where it is on the weekly, this this right here looks like it can go up. This is the 20-day moving average. This is the 5-day moving average on the weekly. So they failed the 5-day moving average on the weekly. How many candles is it on the 5-day moving average? This is 24 candles. Essentially 24 candles that is above the 5 weeks. 20 candles above, well, counting the rally. Yeah, counting the rally is 20 candles from from the low all the way to this high. And this 5 weeks moving average was support all along the way. And then after Fibonacci fell, but they got it to the 1200. So if you line up Fibonacci in on this weekly candle, it's still validated. So they rescue Fibonacci on the weekly, which now technically, you can place it whatever, it still kind of lines up. And it is below the 5 weeks moving average. That is significant to me. I mean, if you just take a step back and look at that, don't you think it looks like it's gonna go down? I mean, just looking at that on the weekly, why would it bounce? I mean, any bounce looks like it's a head fake, even if it bounced back to this 5 weeks moving average. Even if this 5 weeks moving average goes down somewhere, it starts to move down, and let's just say it hits 1100 on the 5 weeks, and this kind of go up, meet it. It looks like it's gonna fail, and it's gonna go to this 20 weeks moving average, which probably moves up to 1050. So that kind of lines up. Everything kind of lines up to me where 1050 is the level. 1050 is the level where it should go, and that meets up. And maybe it'll penetrate it a little bit, but there needs to be a rally for the November election. So somewhere along the line, whether they flush it back down to 1050 or maybe even below that, maybe they go close to Fibonacci. So Fibonacci is 9850. So even if they go close to Fibonacci, it'll be close enough where they can rally or engineer a rally for the November election. But you look at this and you can't tell me the big picture is not down for the Nasdaq. I mean, I can't do an analysis and say, yeah, okay, the 50-day moving average, where's the weekly? Somewhere in the back, I guess. The the daily. Uh, Jeez. So yeah, on the daily, it looks like the 50-day moving average is a really strong support. However, you just have to go with what the weekly, because the weekly is a little bit stronger as far as having signal that tells you is going to go down. Now, I think the best play is they got to engineer some kind of head fake recovery. So I feel like there's gonna be some head fake recovery. Um, maybe Monday, maybe Tuesday before the next downturn to 1050. So how would you play that? Well, Amazon is the what I like to play the most. So in the intraday, what you would be looking for on any strength, I guess you can still play, or I'm gonna still play my regular scalping game. I just gotta be extra careful, like on to go with strong signal if I'm scalping toward the upside. Like if I see something, this is a perfect candle where there's a doji tail. This is a perfect candle where you can scalp, a few, 500, 1,000, whatever. But what you want to do is start to load up more on the downside, especially when it gets to the extreme, especially on Tesla. I mean, on Tesla, if it gets to an extreme, or on Amazon, if it gets to an extreme, and let's just look for an extreme. Let me see if I could see. The downside does not have that wick to play as much, so it's harder to play on the downside. But something like this right here, right, where you see this go up and you see this nice little wick. This is where you can kind of buy something or buy some puts and hold. Um, you know, yes, if you miss the ultimate, you can either gamble and wait for the ultimate extreme before buying the downside, or you can kind of do it in between and just wait it out. That strategy, whatever strategy you choose, this to me, I think I'm gonna on these type of scenario where I see this wick, I'm gonna pretty much sell two calls and maybe buy some puts. So I'll go a little bit big, sell two calls and buy some puts. And on the downturn toward like VWAP, I would cover one of the calls, and that would be the buffer. Just in case it's wrong and it goes the opposite direction, I can cover the other call that I sold and come out pretty much even, and also cover the puts, because you can never really time when the event is gonna happen. However, if you get lucky, and if you are able to hold those calls, eventually the end of days, that is when you make the most money, because the puts that you held from here to here are worth a lot. And if you sell the calls here and cover here, or even hold for the next day, in this case it gapped up, but if it gapped down, that's where you make the most money. And look at these calls options, right? Or these puts. If you had you timed the puts, and bought something here at 25 or even at 20, one put 2,000, you could have covered up here at 12, 13 and make 10,000. That's just one put. That's where you make a lot of money, potentially a lot of money, um, with just playing more aggressively. Normally, I don't play aggressively because you're not gonna make money buying options on the long run. Um, you do not, because these type of runs, even if you play in the calls, I guess you can make money on the push, but in the long run, buying options, that's the weekly. Let me see the daily. I mean, I guess you can make it up doing this huge run, but overall, you're not gonna make money buying options, except during the downturn. So the downturn, buying the puts gives you the most money. Um, I mean, obviously you miss all of this, or I miss all of this, but I still think there's more downturn, potentially more downturn. So that potential downturn is enticing enough to buy some puts and just to hope that the next level on Amazon obviously would be 3,000. So I mean that's not that far away. It's only 100 points away, but it's worth the risk. Maybe just I mean, most of your gains on the puts are already gone from this point to this point. Most of it is already gone unless it goes below 3,000, which is most likely is gonna. If it's gonna go down to 3,000, it's probably gonna flush below it. So at the you can make 150. Who knows? It can even go lower. Maybe the 2,900. Um, that's 200 points on the downside. That's decent gains on the puts. And if you hold your calls that you sold, potentially you can make decent money playing that direction rather than playing the upside, because I don't think the upside they're gonna engineer a push, um, or at least a real long-term push like this. This push has already been done. And if you look at any pump and dump, and I know it's a stock market and it's hard to pump and dump the stock market, but if you look, let's just look at the QQQ. This run on the Qs, the Nasdaq, it's just hard to imagine that they're just gonna go right back to doing this right now. I mean, it's almost unfathomable to think that in a week and a half, or by the time they maybe it'll be maybe they'll engineer it on Wednesday and it's exactly 2 weeks or whatever. It's so hard to imagine that they're gonna attempt this type of maneuver already, because the damage, this caused so much damage, you gotta wait for people to forget. uh, and you gotta wait. And to me, they need to flush it out a little bit more, and maybe wiggle, and maybe a month from now, then for the November election, that's when they reattempt this push for the November election. Right now is early to mid September. So the month of September, yeah, I just can't see that they re-engineer a push this month. So if they're not gonna re-engineer the push, that's not gonna go flat, because it's never gonna just wiggle where it's at. I mean, I just don't see how that's possible. So it either goes up or go down, and the chance of going up is much lower than the chance of going down. So let's play the downside. I mean, you can still scalp. I mean, I'm all of August, I made money playing the opposite direction all of August, because I couldn't play this push. So even in August, you can still make money if you counter trend. So even if you, now it's going to be risky if you do play counter trend because of the flush and the sell off and whatnot. So playing the counter trend is very risky. But you gotta wait for like perfect setups like these guys, right? These are perfect setups to wait for if you're gonna play the upside, where there's a nice doji tail after a clean out candle. Yeah, a fake rally, nice little, and you gotta see the formation of this candle, and then you can play the upside. If you play it any other time, here, whatever, you're gonna get hurt. So playing the upside looks like you're gonna get hurt and you can blow out your account. So why not play the downside, which is safer? And I just don't think they're just gonna engineer the push. And even if they do engineer the push, the classic signature of the push you can see, and you can minimize your loss if you're playing the downside and minimize the loss. But yeah, that is what my strategy is gonna be for next week. Is being more aggressive on the downside, and hopefully that will pay off.